Hi everyone, it's Evan here from the Trade Risk on Wednesday, February 15th with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off with some sector analysis. Now, if you haven't yet subscribed to our YouTube channel, please do so. Bottom right-hand corner, it just keeps you up to date with all of the latest videos that we're putting out a few times, at least several times a week. So if you like the videos, if you tune in regularly, please do make sure you're subscribed to our channel. Now, getting into markets today, we finished higher, another 0.5% on the day, and we're in a complete market melt-up. This is nothing short of a pretty amazing run that we've had here over the past week or so. Let's take a look first now at this recent action. Let's compare it to a couple of other points here. First is November post the election. The slope of this move looks very similar to the slope of the move that we've recently been seeing. If you were to back up into July, this is Brexit. It looks very similar to here. So you can see we're tacking on gains at the rate of both what happened post-Brexit and post-election time. The difference between these two situations and where we are now is that both in Brexit and the elections, we were selling off into those events. So we were in a corrective state, markets were pulling back, and then we saw these V-shaped rallies higher. In what the situation that we're seeing this time around, there was no pullback. We accelerated higher from this sideways consolidation. Remember, this was the 10 to 12 weeks of chop starting from the beginning of December to the end of January, where markets were boring, we didn't know where we were going, it was just all sideways, up, down, up, down. All of this energy, all of this supply is now being unleashed to the upside as we broke out last week and again, really starting to accelerate here over the past 6 or 7 days. So a little bit of a distinction there. Now, we're up 7 days in a row. That uses last Tuesday, this session here, we're up 1 penny here in the S&P in the SPY ETF. So technically 7 days in a row if you want to include that day. That's a rare number. We don't get up to that level too often. So that in itself is pretty interesting. If you were to look at any technical indicator at this point, it's going to be reading overbought. It's going to be screaming at you that we're in, reversal territory, that we're in overbought situations, we're stretched. That's no surprise. I think everybody recognizes it at that point. Those types of indicators, they don't give you the timing. Those indicators just tell you, hey, we're stretched. We're in a historic a point at which we generally turn down, but it doesn't give you the exact day. So this melt up can continue, right? We can go to 8, 9, and 10 days in a row or more of making higher closes. It's possible, but what to keep in mind is that, first off, the more that we continue to rally here, the more likely we are going to eventually snap back or at least start cooling off. What's more interesting to me beyond the technical indicators are market internals, so market breadth, because that to me is a little more interesting because that gives me a visible look here into the hood underneath the market and to say, are we seeing narrowing leadership as we continue to advance? Because if we are, that would be concerning as the market starts to sort of diminish underneath the hood and we're really not being held up by as many stocks the further and further we go higher. That's the concern. Now, the answer to that so far is slightly yes. Yesterday, if you were to look at the advanced decline line, we were up about 40 basis points, almost 0.5% in the SPY. The advanced decline line was just barely positive. Today, the advanced decline line, a little more constructive, but still not really keeping pace with this 0.5% advancement we saw today. So we're seeing a little bit of narrowing leadership there. That would and does have me a little more concerned, or at least not interested in putting on new long exposure right here for my time frame. That's basically the way I look at it. So I'm looking for a pullback like everybody, or some sideways consolidation, digestion. That would start to get me more interested and a little more comfortable to start putting on new long exposure. So that's sort of the big 30,000 foot view here. Market's clearly overbought, and again, to speak to sentiment a little bit, and again from my just one pigeonholed view, but looking and reading social media, it seems like the majority are still frustrated here, both the bulls and the bears, because the long holders, the bulls, either don't have enough exposure and they're not participating in this rally and they're frustrated. And the short sellers are trying to short this market that is just relentlessly going higher, where every single 20-cent dip in the SPY is getting bought. So it seems like there's just general frustration out there. And when you tend to see that, it almost gives you that narrative in the back of your head that this same song and dance of kind of moving higher can continue, or is going to stay pretty damn resilient, and not going to give that sharp move and that sharp entry so everybody can kind of get back in who missed this rally. So just some food for thought, just my sort of perspective on the view on some social media. The way we've been playing it, I put out a post I've been writing yesterday, put out a post just saying having exposure on helps and letting it run as best you can helps. We were sellers again today. We continue to sell into strength, came in with about 55% long exposure, ended the day with about 25%. So we have a lot more cash, not interested in adding any new long exposure. So at some point, I'm going to trim myself completely out of this market, and I'm going to have to just sit on my hands and wait for, again, pullback or sideways range. That's, unfortunately, the reality of taking profits into strength, and particularly in a market that just doesn't want to stop going up. So that's the way I'm approaching it, not looking to short anything just yet. Maybe if we saw some big gap tomorrow, I'd tactically get short, looking for some type of exhaustion gap and failure, but that's all very tactical, situational stuff. So market looks good if you're a long holder, right? Multiple time frames, all-time highs across the board. So that's the picture there in the S&P 500. The IWM is equally as interesting, because I think this is where the real secret and the real sort of fuel to even a bigger market rally lies, and it's in the IWM. So the IWM yesterday, the small cap index, did not make a new all-time closing high. Today it did, and today it provided a little bit of this sort of mini buy signal as it took out the past 2 days highs, cleared at all-time highs, closed at all-time highs. So this whole channel, all this supply in here from the past 12 weeks since the beginning of December really hasn't gone anywhere. In the S&P 500, we're seeing it again unfold and sort of move to the upside. In the IWM, it's just barely getting started. So if this wants to make a meaningful leg higher, if this IWM, if the small caps are going to really put in a second leg higher from this November leg higher that happened post-election, then that clearly bodes well and is very bullish for the stock market in general. Now, again, it doesn't have to do it in a straight line, so we need to pay attention to it. It arguably still is, quote, the weakest sector, as it's just breaking to new all-time highs today. If it started to fall back below 137.50, 137.75, back below this level, then that would be of interest and would really play to sort of the short thesis that could derail this rally if we see the small caps suddenly give up these gains. So that's something to note here. I think IWM is very important to keep close attention to at this point. NASDAQ 100, this thing has just been a monster. This is certainly the most overbought market of them all right now, very stretched, really put in a pretty meaningful day today, as well as biotech, I think, did a lot of that heavy lifting today. But the Qs have been doing a lot of work, continue to stretch higher. Basically the same comments as the S&P 500, right? We're in overbought territory. We should recognize that, and we should look and just tighten up exposure. If you're in this, in these groups of stocks, then you just want to pay attention to that. But all-time highs across the board today in all of the major averages. So with that, let's get into some of the other major markets. TLT has been selling off. The odds of the rate hike for March have been increasing recently, putting some pressure on TLT as rates rise, and anticipation of that. You can see starting to lose this trend line here. And if you don't like this trend line because it doesn't have that many data points, that's fine. Use these lows here from February, which it's just about testing this 118.50 level. If we start to roll over from here, then you have these December lows down there right around 117, about 2 points below this market. So either way, the sellers are a bit in control here. Could be at a small inflection point. So pay attention to the action tomorrow, see if you see any sharp reversals. But for now, sellers in control in TLT. GLD also catching a bid today, up almost 0.5%. This has cooled off a little bit. It's already had 1, 2, 3, 4. This is the 5th day pulling off of the highs. It was up today. Maybe this is a nice little low that we can trade against. Maybe GLD gets back to these highs here at 118.50. It's only a point higher, but perhaps this uptrend is going to continue and persist. So might have a day one sort of move higher there in GLD. And silver continues to ride very smooth, this 8-period EMA, this uptrend here on the short-term time frame ever since breaking this longer-term downtrend line. So silver, gold look good there in their near-term trends. Oil is something I'm continuing to watch very closely as there's been very little movement. Lots of overlapping price action, lots of oil getting traded at relatively the same prices, and this is generally what sets up nice breakout patterns. So I'm paying attention to it. Tried to make moves on this already this year and gotten slapped on the wrist for trying to play for a breakdown, but something I'm still going to pay attention to as this base continues to move sideways in very orderly fashion. And UNG continues to look pretty messy. A little bit of uptick on volume there on an up day, but still has a lot of work to do as these fast moving averages are very sharply heading lower. So UNG still not that interesting to me at this point. Getting into some of the sector analysis, XLV, this is where a lot of the strength was today. This is healthcare and specifically biotech. Look at IBB up almost 2% today, clearing the highs from January, getting back towards the highs here from November. And there's a lot of resistance up here right around this 295, 300 level. And we're very closely getting up there at this point right now. So quite a bit of momentum. If you were to look at the XBI, the equal weighted biotech, also seeing a nice move today. This is a position that we've been in for a couple of weeks now, actually, and we sold some today, the first sell on this position. So we had a nice run in XBI, but this one's getting back up to the September highs, getting a little bit of a different picture here in the equal weighted, but still getting up to some resistance levels. So lots of strength today, help fueling the rally, along with the financials, which continue to emerge from this sideways range that we saw this week as it started to break out and move, or arguably late last week. So XLF, IBB, big winners today. On the downside, or at least the laggards, XLU, even though it did stage a bit of a reversal here, which actually does look interesting, it did sell off a bit, particularly as rates continued to climb today, putting some pressure on this group of stocks. So XLU still kind of hanging out here at a pretty interesting point. XLE, this is energy. Again, we saw, if you look at the weekly chart, saw this reversal last week. Still haven't been able to build on it, and we're at this little short-term resistance here at 73.60. Oil's continuing to stubbornly move sideways. This will be interesting. This could also be an interesting push or pull on the market, depending on which way USO really starts to break. If USO saw a surge higher and XLE really started to ramp higher with some of this, getting this sector back in motion, because this has been a lost kind of dead sector here for the past 2 months. If this starts to get in play sharply to the upside, that could help fuel the market. Or if USO really begins to roll over and XLE sees continued pressure, maybe that's the excuse that the market needs to start to pull back in general. So could be interesting link there to oil. I'd want to pay attention to that in these stocks. And then finally, XLB, materials really haven't hit a new high here. You're actually seeing us still trade below the highs from January. That's mildly interesting, as a lot of these other sectors are breaking out to new highs right now. You're seeing XLB continue to hang out here, maybe puts in a lower high, maybe rolls over from there. Something to think about. If you're looking for short exposure, this might be the sector. So that is the video. Hope you guys enjoyed. Again, if you haven't subscribed, please do so in the bottom right hand corner. Thanks for watching, and I'll talk to you again soon.